The value of Indian rupee against the US dollar has fallen to historic lows in the forex market. What are the reasons behind it? What is the role of Reserve Bank of India? Who are the winners and losers? And finally, what is the way forward? Let's understand in this video. Hello and welcome to Unacademy IAS, a one-stop destination for all the English medium civil services aspirants. Before I start the session, I have a very important announcement to make, and this is applicable for the civil services aspirants who are appearing in 2026 and 2027. All our courses right now are available at a discounted price of 20%. Those who are interested to enroll, check out the details by clicking on the link provided in the description. Whatever is the price mentioned in the website, use the code IS English and you shall receive a discount. Let's begin the discussion. What are the reasons why Indian rupee has depreciated? First and foremost, what is the meaning of depreciation? Whenever one currency loses value against another currency in a forex market, the currency which is losing value is said to be depreciating. And whenever this happens because of the market forces, we use the term depreciation. If it is done by the government, that is basically called as devaluation. In Indian market, because the market forces most of the times allow, or market forces decide what is the exchange rate, we use the term depreciation. And for the first time ever, Indian rupee has depreciated to historic low. Yesterday, for $1, Indian rupee had the exchange rate of more than 90 rupees. So what are the reasons behind it? Let's understand. The first and the most important reason for this depreciation of Indian rupee is the trade deficit. For the month of October, the overall trade deficit in case of India crossed more than $41 billion. And this particular trade deficit was on account of two important things. One, India's exports to the global market were hit, especially to the USA market were hit. As a result of which, the amount of dollars which were flowing into India, which were coming into India, reduced. And on the other hand, India's imports because of gold, silver, fertilizer, etc. The value of these particular imports rose up, went upwards, and as a result of which the dollar outflow increased. So on one side, dollar inflow has gone down, and the other side, the dollar outflow has increased. This actually is nothing but trade deficit. And whenever there's a trade deficit, what is the meaning of it? In the forex market, there is sales of rupees are being sold and dollars are being purchased. Again, I'm talking on net basis. Net basis in simple terms means at the end of the day, whether overall more dollars are being sold or more dollars are being purchased. So in the Indian forex market, because of the lowering of exports or lower exports as well as higher imports, rupees overall were sold more, supply of rupee increased, and this actually led to depreciation of Indian rupee. This is the first and a very important reason for rupee depreciation. Second very important reason for the rupee depreciation is the outflow of foreign portfolio investors. The outflow of dollars because of FPIs. Since January this year, more than 1.5 lakh crore, I repeat, more than 1.5 lakh crore worth of equities have been sold by the foreign investors in the Indian market. And what they've done is they've basically taken the rupees, gone to the market, that is forex market, sold the rupees, purchased the dollars. Again, in a nutshell, supply of rupee has increased, demand for dollar has increased. That has led to depreciation of Indian rupee. Some of you might be thinking now, sir, India is one of the emerging markets, the fastest growing economy. It has registered 8.2% GDP growth rate. But even then, why are the foreign investors overall, net withdrawal has happened? The reason behind this is that there are multiple concerns which have been raised by the foreign investors. For example, there is right now no clarity regarding the free trade agreement between India and USA. In fact, this is also one of the reason why Indian rupee is depreciating. It's been multiple months. When the negotiations started, it was expected that the free trade agreement would be signed very soon and there would be a relief for India's exporters. Since the announcement, there have been multiple announcements or multiple clarifications which have been provided by both the sides, Indian side as well as the USA side. But so far, no concrete announcement regarding what are the provisions covered under FTA, whether Indian exporters will get the relief of 50% of the tariffs or 50% tariffs announced by the USA. No clarification has been announced. And because this has taken so much time, the foreign investors are worried. They are concerned whether there will be an FTA. If at all there is an FTA, whether this will provide certain relief to Indian market or not. This has led to certain concerns, and the foreign investors do not like uncertainty in the market. They have started withdrawing the money from India, started moving the money to USA market. In addition to this, there is one more concern. What is the concern? In the USA market, the yield rates on government securities have started increasing. And especially after the lockdown was lifted, after the government shutdown was lifted, the yield rates have started to improve. It has started to increase, which essentially means the amount of money that you invest on that returns would be higher in the USA market. That is also one of the reasons why foreign portfolio investors are taking the money from India and taking the money to USA market, thereby increasing the supply of dollars in the forex market, leading to just make a correction, thereby increasing the supply of rupees to the forex market, and this leading to depreciation of Indian rupee. Now, while all of this is happening, whenever there is a volatility in the forex market, what is the role of the Reserve Bank of India? Listen to me very carefully. Reserve Bank of India generally, whenever there is so much of volatility in the forex market, will try to stabilize the exchange rate. Please remember the term stabilize. Do not use the term RBI fixes exchange rate. If you say RBI fixes exchange rate, that will be incorrect. Reason being, India does not follow a fixed exchange rate regime. India follows a floating exchange rate, although it is not completely floating. It is most of the times market forces which are allowed to determine the exchange rate. But here and there, RBI will intervene and try to stabilize. So RBI plays a very important role by selling these forex reserves that they have. If there is a rupee depreciation, RBI will sell the dollars from the forex reserves, increase the supply and stabilize. And it's not that RBI has not done anything. Listen to me very carefully now. In this year alone, since January, I repeat, since January this year alone, Reserve Bank of India has sold approximately $38 billion worth of forex reserves in the forex market to stabilize whenever there is a volatility in the forex market. But having said so, RBI also on the other side simply says Indian rupee is overvalued. Against a lot of these particular currencies, Indian rupee is overvalued. And if rupee depreciates, the valuation problem that is associated with Indian rupee will be addressed. On nominal terms, nominal and real, what is the basic difference? Nominal means without adjusting for inflation, real means adjusting for inflation. When you talk about nominal terms, rupee has depreciated. It is one of the worst performing currencies in the Asian market. Agreed. But when you look at the real exchange rate, where adjustment for inflation or the price levels is done, Indian rupee is overvalued. It has appreciated even against the Chinese yuan post pandemic. Now, with this kind of a depreciation, this real exchange rate problem or the overvaluation in that real exchange rate would be addressed. That is the precise reason. Even though the rupee has crossed the psychological value of 90 against the dollar, RBI is not too much worried as of now. And there is one more reason why RBI is not too much worried as of now. That is basically the domestic inflation rate. The domestic inflation rate for the month of October, inflation rate was below 1%. And RBI is aware of the fact that even if rupee depreciates, the imports might become costlier, but there is no danger of inflation crossing 6%, 7% or 8% because right now inflation rate is below 1%, and that was the record for the month of October. So these are some of the reasons why RBI is not too much worried about the rupee depreciation. But having said so, is this depreciation of Indian rupee a cause of concern? Should it be cause of concern? Answer is absolutely yes. It should be a cause of concern. Why? Historically, it has been seen that there is certain times when there is rupee depreciation. That is cyclical nature. Certain events happening, or right, let's say from one quarter to another quarter, yes, rupee experiences a depreciation. But this time, it is not the cyclical factors which are contributing to the rupee depreciation. It is not the domestic factors which are contributing to the rupee depreciation. In fact, it is the structural problems that are contributing to rupee depreciation. What do I mean by this? Let me explain this. In the context of India, on one side, India has registered 8.2% GDP growth rate for the second quarter for the current financial year. But at the same point of time, our import dependence has not gone down. Our import dependence even today is very, very high. And when you have very high import dependence, even though you are achieving very high GDP growth rate or higher GDP in the domestic market, this import dependence is a structural problem. You'll have to address it. And as long as import dependence will be higher, there is always a concern that it will contribute to the trade deficit, which in turn will contribute to the rupee versus dollar exchange rate by dragging down the rupee value. This is the first structural issue that we need to be worried about. Second is FDI. FDI investment, foreign direct investment. The government of India has set up a target of attracting $100 billion worth of FDI every year. But if you look at this year, in this year, the amount of FDI that has flown into India has got stagnated at around $30 billion. At around $30 billion. So the concern is, if you want to achieve higher GDP, you need to invest. In order to invest, you need to attract foreign investments. But the amount of foreign investments under the concept of FDI is not increasing at the expected pace or at the pace which is required for the Indian economy. That is one more structural issue. And third one, and before I explain the third one, those who are wondering, what is the connection of FDI to the exchange rate? Simple. FDI inflow means more and more dollars will come into India. And that will help us in stabilizing the exchange rate. And the third issue is the growth of exports. The growth of exports. As already mentioned, India's exports to the global market have been hit. For example, India's exports to USA have fallen by 8.6% in the month of October. And India's exports overall have fallen by more than 12% for the month of October. So on one side, you are able to achieve higher GDP. But at the same point of time, if you want to ensure there will be healthy inflow of dollars, which will help us in controlling the rupee depreciation, you will have to promote more and more exports. Now, who are the winners and the losers in all of this? Who are the winners and losers? Let's start with the winners. The winners will be those who are going to send remittances to India. Because please understand, as rupee depreciates, for every dollar they send to India, they'll be able to get more amount of rupees. So the people who are sending remittances, they will be winning because of the rupee depreciation. And as such, according to the Government of India report, the government, or let's say the Indian economy, has received more than $135 billion worth of remittances in the year 2025, that is the financial year 25. Second one, the exporters. The exporters. Exporters are also, to a certain extent, winners. Why I'm saying to a certain extent? Listen to me very carefully. Whenever rupee depreciates, theoretically, exports should become more competitive. Simple. Whenever rupee depreciates, exports should become more competitive. But it is slightly complicated in case of India. Reason being, India basically imports, it's a net importer. So rupee depreciation will add to the deficit, that is a trade deficit, because imports which are necessary, the price of that will keep on increasing. But at the same point of time, the exporters will import lot of raw material, lot of inputs which are used in manufacturing and export of the product. So when you import a raw material, because of rupee depreciation, the cost will increase. As a result of this, cost of production will also increase. To a certain extent, some of the exporters might not be able to enjoy the benefits compared to other exporters because the inputs will become costlier because of rupee depreciation. So exporters will be able to get the benefit, and overall Indian economy in the context of IMF. What do you mean by context of IMF? IMF is always worried that RBI intervenes too much in case of the forex market. Although on paper we say we follow floating exchange rate, it is not purely a floating exchange rate. Very recently, IMF has classified RBI's, or let's say India's exchange rate as crawl like arrangement. What do you mean by crawl like arrangement? You are basically allowing most of the times the market to determine the exchange rate. It is somewhere between fixed exchange rate as well as floating exchange rate. So you most of the time you're allowing the market to determine the exchange rate, but whenever there's a volatility, you are interfering to basically adjust the exchange rate. At the same point of time, who are the losers now? The losers will be one who have right education fees to pay abroad. They will have to shell out more rupees to get the dollars. The losers, other set of losers will be the government in the context of the imports of fertilizers, wherein now the government might be forced to pay higher amount of subsidy. In addition to this, the crude oil prices when imported because of higher depreciation might increase, and this will have an impact on the supply of crude oil when refined the market components, or let's say the refined components, petrol, diesel, the prices of might start increasing, which will hurt the consumer. Even the people who are planning to travel abroad, their cost will increase. The companies who have borrowed money in the form of dollars and they are due to make a repayment now, they will have to shell out more amount of rupees. And not to forget, right, basically the gold and silver cost now will become higher because of rupee depreciation. So these are certain winners and losers because of the rupee depreciation that has taken place here. And finally, what is a way forward now? What is a solution? The solution is not that simple. Reason being, you will have to have two sets of solutions. One for short term and the other one for long term. One for short term and the other one for long term. In case of short term, whenever there is too much of volatility, RBI has to intervene. RBI doesn't have to be worried too much about this particular psychological barrier of 90 rupees. As such, the real exchange rate for Indian rupee, it is overvalued. Let it depreciate. Nothing as such will be a big problem. But please understand this. Will this hurt a common man? Of course, yes. It will hurt a common man. But the Reserve Bank of India at this point of time is more worried about, right, the overall exchange rate. It is more focused on overall exchange rate. And when you look at RBI, the main function of Reserve Bank of India is to control inflation. And because inflation is under control, RBI will not be too much worried about the exchange rate as of now, as long as there is no sudden volatility. In the long term, how do we address this? In the long term, the focus has to be on promotion of exports. Promotion of exports, improve export competitiveness, promote investments, promote more and more exports to other market, diversify your exports. In addition to that, one more way to ensure that the production and exports will increase from the Indian market is to attract FDI. So there is a short-term solution as well as a long-term solution. We need to work on both of them. Let's wait and see. Tomorrow, Reserve Bank of India is going to take a policy decision regarding interest rate. Whether RBI will bow to the pressure, change the interest rate, which will have an impact on the inflow as well as outflow of currencies, or RBI will basically take the same path it has been taking for the last couple of months regarding the exchange rate. So these are certain important points I wanted to discuss in the context of the exchange rate. Now, here is a question for all of you. Consider the following statements. The central banker or RBI is the custodian of forex reserves. The sale of official reserves is conducted by RBI. Which of the two statements is correct? Do let me know the answer to this particular question in the comment section. And if you have liked this particular discussion that I've done, if you have gotten the benefit of the discussion that I've done, hit the like button. If you're yet to join our YouTube channel, kindly do it right now. Thank you. Take care.